Arjun, I want to talk through the big themes. It's hard to capture them all in one place. So I suppose I would just ask, are investors by and large expecting a strong set of earnings this season, weak earnings? What's the general expectation?
Yeah, I think a few points. Firstly, we've seen a massive rally in the NASDAQ and a lot of these tech names as well. And I think that is more a function of interest rate expectations rather than investors sort of cheering on the health of the tech sector at this point. And just following on from that, then the expectation is low going into this earnings season. We have seen earnings expectations come down, but I think the market is not expecting blockbuster numbers. If I just give you a read of what analysts are expecting in terms of earnings per share, they're expecting a 13% drop year on year for Alphabet, 25% drop at Meta, 43% fall at Amazon for earnings. So they're not expecting blockbuster numbers. And I think the two themes, cloud computing and advertising, just given the companies that are reporting, again, for cloud business at Amazon, they're expecting just 15% revenue growth. This is a dramatic slowdown from what we've seen over the past quarters. At Microsoft, just 14% revenue growth in the cloud division. And when it comes to advertising, both Alphabet and Meta are expected to report a drop in ad revenue, again, because of the worsening macro situation. So I think really going into this, there's not a rosy outlook by any means. The key, really, I think, is the market's expecting bad numbers. These companies just have to at least meet expectations. That's the bare minimum. Any sort of miss on expectations will be bad news, certainly for these companies' share price. And just broadly, sentiment on the tech sector, I think, regardless of what interest rates are doing. I think the key here is going to be what is the forward guidance? What are companies saying about not this, the current quarter we're in, but also the next kind of couple of quarters out and the rest of the year? Are things going to be improving? Are companies going to spend again on cloud? Are they going to spend again on advertising? Those are some of the questions I think the market will have.
We've been hearing so much about cost cutting in the tech sector, huge headlines around the thousands of layoffs that we've seen come out of Silicon Valley. Is that a positive from an investor's perspective? Obviously, it's good for the bottom line, but from a growth perspective, if you're cutting back, then that impinges just how much you can grow.
Yeah, there was this sort of overhiring that did take place, I think, during that sort of pandemic boom, and I think there's a bit of a normalization taking place now. Maybe companies realizing some of those areas, those moonshots, those new areas they invested in, aren't as profitable and they can't chase that in this environment. I think key, though, is understanding where those job cuts are coming and investment. Microsoft in OpenAI, massive investment. Of course, Google investing in AI as well. That's what analysts are going to want to be talking about, AI. Where's your AI investments? What's the strategy? Where are you investing? Are you still investing in technology that is key to the future? That's really going to be, I think, key to hear that the companies need to get out. Yes, we're in a cost-cutting mode. Yes, we're sort of trimming the fat, if you will, but we are still investing for growth. And that's going to be, I think, the key messaging they're going to need to thread very carefully in the earnings calls.